Welcome, traders, everyone, degenerates. Let's see if we are live. This is the live shenanigans that we always got to go through. Okay, looks like it's working. So, yeah, I want to do these live streams where I just talk about the markets and maybe rant about anything and everything, but the primary focus is going to be on trading and the markets, and it's kind of like a learn as you go thing. I'm not an expert. I do have Chat GPT on my side, which is pretty nice to have, and so we're all going to learn together as I do these videos, and I want to do like live streams and tap into a bunch of other kind of financial. Basically, I want to do, what do you call it when you're like piggybacking off of somebody else's content, rebroadcast their content. There's a word for it. I want to do that. So let's get into it. We could talk about order flow. We could talk about like the macro as I see it, which is like gleaned together from a bunch of other people's views, and then maybe some names I like and any rants I have, and probably some of that or none of that is going to happen. But let's talk about order flows. So this is a cool tool. I won't name it unless they pay me like $1 million, but it's a startup that is tracking options activities, and so you can see in real time the order flow coming in. So this is the bullish flow for today. We got Tesla, Rivian. Rivian has been on a tear, and I had sold calls, and I just let those calls fester. And yeah, it's been painful. So of course, now that I'm like switching into calls, the trend will end. But I do feel like we got to put Rivian back a little bit, right? So then Nvidia, Amazon, Alibaba, Apple, Meta, Neo. I'm really kind of getting into the EV trade again. The trader in me knows that Tesla is going to be the dominant player in the space. But that's also because I don't really see them, and never have, as a car company. And they're an AI and robotics company, obviously. And I think they say that themselves. So cars are one of their robots. But I do think that people, just to spite Elon Musk and for a variety of dumb reasons, will not buy Tesla ever. And they won't touch it. And they want alternatives, and so I think we're going to see like kind of a swell. There'll be a bubble in EVs, I think. So that's my trader view. And bearish flow for today, we had Tesla getting put so hard right into close. Oh my God, let's go look at it. Look at all these puts. Can you see it? Nice. Zoom in a bit. Even more. Cool. Yeah, like right into close, Tesla just got slammed. A bunch of people did. Disney, Tesla. I mean, SPY really is what got slammed. And so it's interesting how these indexes work, because people talk about like the Magnificent Seven or like the number 11 or whatever, like the top 11. I don't know. There's a bunch of like concentration in the market in big tech. You have like Apple and Microsoft, Amazon, Google, Meta, Netflix, whatever, Nvidia, all the big kind of like high growth, high octane, big tech companies. Well, you have to imagine that there is a feedback loop happening here where people are like buying the indexes because you have to have that name, right? Everyone's in that name. They're in the QQQ. Anyone could start something that tracks the exact same thing or better, but since QQQ has all the momentum, it carries with it um, there's I think there's a feedback loop between the indexes and their top performers, where people are like, we got to own these names because they're in the major indexes, and then people are also just buying and selling the indexes. But all this stuff is like called and put so much. Anyway, who knows? Who knows? I'm learning. But yeah, so Tesla got put hard into close. Let's go see some other ones. Nvidia this week, Disney was getting slammed. Somebody does not like Disney. I think that they're trying to take it down so they can fill up. Because if we look at a price chart on Disney, let's look at that. Bigger. Give it to me bigger. Anyway, look at this. Can you see it? A little bit. Look at this. 5-year trend. Disney has every story ever made and an incredible arsenal of both physical and digital assets and intellectual property or whatever, and brand value and momentum and history and content and culture and a bunch of other shit too that makes them great operators. I mean, not great operators. That's their problem, I guess, is they're not great operators. I don't know. I know that, yeah, like I don't have a exact understanding other than everyone, like, you know, you can go on CNBC and they'll tell you all the problems with Disney. That's all such short-term thinking. Like, this company is going to outlive me. I'm going to die first. Like, Disney outlives me. So, like, if Disney, this entity, which is going to outlive me, is trading below where it was 5 years ago, then I get a price in 5 years of information today. And if it goes $60 lower, well, there's probably a really good reason, right? But we can protect it from that in a variety of ways anyway. And anyway, like the idea is it seems the value in $88 Disney, and who knows how low it could go. Maybe it gets cut in half. I don't know. Could happen tomorrow. But the value of an $88 Disney is that you were paying $112 in 2018. And even in the depths of like the pandemic, you're paying $90. The lowest it ever got, the lowest print on the screen is 85. So that is, in my mind, a lot of freaking information that has been compressed into the price already, and you're buying that information on discount. Anyway, that's the way I see it. But we could talk about the, well, let's see a little more order flow because it's kind of fun. So Disney was getting put down all week. Let's go to this week. I have almond milk. You're going to have to bear with me. I have to. Thanks for bearing with me. mRNA, whatever. Don't care about any of that. But yeah, look at the put flow on Disney. That's crazy. I mean, Tesla gets the most option activity, no doubt. But some other names that I like or care about, we gotta do like a lighting thing. It's a live stream. I'm sure it works. Right? They gotta make these things pretty durable. So, can you still hear me? Am I not streaming? Shit. Nice. Okay. It looks like everything is still working. Yes, perfect. And oh, we even got a little lock of hair out. Okay, so what are we looking at? Disney. Let's go back to order flow. So, what's going on? Are we in a bull market? That's kind of like the question. Are we in a new bull market? And the bears like to point to a really important point, which is the inversion of the yield curve. Let me make sure I am able to see what I'm seeing. Okay. So they talk about the inversion of the yield curve. And what does that mean? It means that you're getting paid more to take less risk, which is like not ever how it works. You know, you always get paid less when you get less risk. Basically, the more risk you're willing to take on, the more money you're supposed to make. But when there's an inversion in the yield curve, the short-term bonds, the 2-year yield, is greater than the 10-year yield. And so people look at it as a recession flag or whatever. It's a market indicator. So it indicates something, you know, like it's not gospel. It's definitely not like you can put it into a model and that model can give you a probability and a prediction. But the thing that is so cool and fun and interesting about markets is that nobody knows. Nobody knows. Nobody can know. Now, there's a lot of manipulation and people are moving the prices all the time, I believe. And that's to say nothing of the government, like raw manipulation from like the Fed and Congress and all of the lobbying companies and all of that stuff. But whatever, you know, it's just part of the system. That's why we love Bitcoin. It's kind of good to have all that stuff into the system. It's almost good to have that level of puppeteering or whatever, in part because markets are so unpredictable. Like the price, and this is my favorite learning of recent times. I believe I got it from the teachings of Nassim Taleb, who, at least it was while I was listening to his books, that I came to irrevocably believe and just know to be a fact that the price of any security can double or fall in half at any moment. At any moment. And so if you're going to be in shares, I guess that's fine. But if you're going to be using like margin and options, you really got to learn how to like both protect yourself and profit from those kind of like asymmetric outcomes. That's the main idea, is how to profit from asymmetric outcomes and to focus on that. So anyway, we're in this crazy macro that is like nobody knows, I guess, what's going on with the bond market. People are selling bonds at the 10-year a lot. And so I guess that's a recession flag. Even if it doesn't mean anything. It means that there could be a recession, which is always true. But there is a good question out there, which is, are we in a new bull market? And I think that there's mounting evidence that we are, but like every technical indicator will show it definitively in the fullness of time. And so it doesn't really matter. My new philosophy on like trading and investing is, because of the uncertainty of markets, you can't just take a long-term view. Even if you are a really long-term player, you can still capitalize and really improve your returns, assuming you can figure it out properly, by having some degree of like active management anyway, or not, or I'm just like a trader. But I think there's a way to take like a long-term view and react as to the market in a way that gives you like a lot more upside than if you just held, because this volatility. So like if there's a V or a whatever that is, a mountain, like a inverted B, whatever. Um, all that volatility, like imagine if like through that you were able to do some trades that like reflected the actual reality of the situation, such that you were like rewarded, especially in these asymmetric outcomes. But anyway, just like the macro, everyone talks about yield curve inversion. That's what it means. It just means you're getting paid more money to take less risk, which is crazy and backwards. And so we know it's like a sign that something is wrong. What it probably is that the Fed almond milk hiked rates way too fast, and they just like did a giant fucking like churn on the markets. It's basically the whole thing that happened with COVID. We just shot ourselves in the foot. It's crazy. Like we just shut down all of these small businesses. Of course, all this stuff accrues to the government. Don't need to talk about that. Going back to order flow. Let's talk about some names I'm interested in. Let's talk about mispriced names. I have to start with Tesla. It's not mispriced, I don't think. I don't think it's like unfairly priced, actually. Just compared to what the company can be, if you're going super long on Tesla and you just want to make sure you have some exposure, then I do believe that you could just buy here and just hold. And in the fullness of time, Tesla is going to be a giant, enormous, multi-trillion-dollar company, or zero. So I don't think they're going to zero. But yeah, like you can see, we're kind of like in this bullish environment, at least according to the options order flow, day to day that changes. But it's been bullish for a bit. And so we should talk about some names. The mispriced names I see, yeah, so starting with Tesla, they're not exactly mispriced, but that's my thoughts on them. I really still think Coinbase is fundamentally mispriced. Same with Robinhood and with the ARK funds, basically all of the ARK funds, but especially ARKK, which is just gets so much short interest that I think you're always getting like maximum truth with ARK because they're so shorted that whatever the price is like they couldn't stop it from being that. Like Nvidia, like let's look at the short interest on Nvidia. Let's look at the order flow. So yeah, it's like all calls all the time. Let's look back in history, going back through like June 1st. It's like super bullish, all calls. Now let's look at ARK. Bearish the whole time. What? Anyway, now it's overexposed. Damn it. All right. Don't fall over. Okay. So that's what I'm talking about. Is like this ARK is the freaking truth, because they have so much short interest and like what they're just some, why. It does give you like a price advantage, I think. And then you get these like short covering rallies. I don't know. I don't have a price target for ARK, but I do think they hold like some of the most valuable and disruptive names. I think that I see the same thing. I think a lot of like Silicon Valley investors, what are they looking for? Strong, passionate founders who own a compelling product that can disrupt and change. I think that's what everyone's looking for. That's kind of part of the pattern, at least. And so ARK invests in a lot of those funds. And if I had to like take my view differently, I do think that there is a way to take advantage of other market dynamics, basically because through options, which give you unlimited options. You can express any market sentiment or thesis with options for very little money. They're really interesting. And it's a little confusing. If you don't know options, you get two choices. You can call or put. So calling is being like, I'm calling it, like 8-ball corner pocket, papa, I'm calling it. You know, like you think you got an idea about what it's going to be and you're calling it. And so you're like, okay, I think ARK is going to be 65 by December 15th. I'm calling it. And then you can go buy an option. And if you're right about that, you get paid major because ARK is at like 44 right now. So that's a huge price change over that course of over that period of time. And options, they use like this model, Black Scholes model something, and you can derive through like these different signals. They call them the Greeks. Some information about the contract and like how the price will change as the underlying asset changes and stuff like that. But that's all complicated. The main thing to understand about options are they give you leverage. So everything's 100x. It's a lot of leverage. Each option represents a block of 100 shares. That's a lot of shares. When you really stop and think about it, it's pretty crazy that you can just buy a block of 100 shares far into the future and deep out of the money. And if you're right, you get paid. Like, incredible job, human species. Good job, like building the markets, not just trading, not just like having these great markets, but then building these abstractions that allow us to own, if what's the word I'm looking for? Intangibles, like something that could never be owned. Like you're owning the idea of the company. Anyway, you're owning a real thing. Each security represents a real company. So, and it's a way for, and then now we like fractalize it, and then we are now creating all of these different derivatives on everything, and everything has an inverse, and you know there's like a plus and a minus and a put and a call and a long and a short on everything, and it's awesome. And we keep creating more instruments, and I'm really excited for synthetic EFTs, electronically traded funds. I think I said it wrong, ETFs. And that is going to be where like you can bundle your own companies at your own distributions. You can have rules with dividends, all sorts of complicated stuff in a synthetic ETF. And then you create a portfolio built of those synthetic ETFs. Anyway, just ideas here. We got a lot of ideas on the markets. That's why we're making these videos. So the macro, everyone's talking about this inversion. It is pretty crazy. If you want to take the long view, boom, always helps, right? So why can't I zoom in? Let's see if I can make this somehow bigger. No. All right, I give up. But yeah, look at that. So this is how it should look, a positive yield for long-term risk. If I'm buying a bond for 10 years and I'm getting paid to hold that to maturity, I would expect to be, because that capital is locked up in that bond, which is like pretty shitty yield if I'm being honest, compared to what you could get through contracts. And so anyway, it's cool to own bonds, I guess. And so people buy these 10-year bonds and they're getting paid now more to hold a 2-year bond. So like that capital is tied up for 1/5 the time and you're getting paid more money. Obviously, that's a better deal. But it more is like a signal that something is amiss, you know, like something's not right with the markets. And the bond market apparently is huge, and there's like governments have bonds and companies have bonds, and it's a whole interesting thing that I know very little of. But I do know that people consider the 2 to 10 year spread a market signal, and you can see clearly that it is different than it's ever been, right? We can all see that. That's different. So that's the macro. I was gonna we could listen to some of these videos, but I gotta run actually. So we'll save CNBC.
And it all brings us to our talk of the tape and whether today's jobs report was just right to keep the Fed from turning much more aggressive.
Okay, yeah, it's like these jobs reports. I mean, it's cool. I'm not like there's a lot of gerrymandering happening with these
aggressive,
numbers.
even as it shows still strong labor market and what it all might mean for the rally. Let's ask Charles Schwab's Lizanne Saunders, Chief Investment Strategist there. Lizanne, great to speak with you on all this. I mean, I guess the question is, do you think the market is correct to take a little bit of comfort out of today's numbers? Essentially, we're not seeing an overheating economy, but also not one that's outright stalling.
Yeah, I suppose in the context of the nearly 500,000 ADP print, which really kind of freaked out investors, I think you could take some comfort. But of course, we're starting to see the weakening that although the Fed wants to continue to quell inflation, might be starting to send some signs of sort of full official recession versus what we've been calling the rolling recession. I think it was the slightly hotter than expected wage number and the uptick in hours work that probably moved the needle a little bit in terms of probability.
What anyone will tell you is that they've been talking about this recession forever. They talk about how they've been talking about this recession forever. And so it's kind of a truism, right? Like, yeah, of course, there's going to be a recession. Yes.
Abilities for a July hike, which were already high, but now they're up around 95%. Beyond that, meaning September, it's the data that's going to define what the Fed does beyond July. But I think a hike is basically baked in.
Yeah, it does seem that way, certainly at this point. Although, what are you picking up in these numbers today that suggests to you that we may be now getting closer to that more broad-based formal recession? I mean, obviously there were downward revisions to prior months' job gains and then about a 40,000 job miss for June.
So you also saw the spread between household and payroll or establishment survey data. The establishment survey is what generates payrolls, and then the household survey is what generates the unemployment rate. And although that, in the case of household, was up, that is...
Let's hear the commentary on Meta.
Our next guest company works directly with both Twitter and Meta to provide... Our next guest company works directly with both Twitter and Meta to provide Fortune 500 advertisers tools to measure advertising performance. Joining us here at Post 9 this morning, DoubleVerify CEO Mark Zagorski. It's great to have you.
Great being here.
What is interest like right now in Threads?
We've heard a lot of buzz from advertisers. I mean, they're always looking for alternatives and new places to spend, particularly to find reach in new ways and reach new folks.
So we're in an environment where capacity is okay. Right?
Yeah,
there's not too much at the moment.
Yeah, there's been so much fragmentation in the space. And
okay, speaking of that, I want to just talk about puts more and option contracts because I'm learning about this stuff. But when I first started getting into options, I saw them. The only thing I saw was a call option, and the only thing I saw was like more money up, higher, faster, to the right, up and to the right, that kind of whatever. Like, the most valuable contract is the put. The put is so well named. Stay put. Like if you have, I'm calling it 8-ball corner pocket. Ba-ba, right? Stay put. Stay fucking right there. Don't you move. Stay put. That's what a put does. Is it just keeps it there. It keeps a block of 100 shares there, no matter what. The sun could explode. That might ruin our day. But like the stock price could fall down 99% and that put contract would still give you the option to sell at that existing price if you somehow manage to hold it through that whole decline, which nobody ever could. Like, you'll sell it at 20%, as you should, whatever. But like you could build a wall, you could build layers over time. Like puts are basically, you could think of them kind of as insurance or as anti-equity. I don't know. There's like a lot of value that I haven't fully kind of like modeled in my own understanding of puts. But like the basic concept is like, let's say you're shitting your pants because your stock is falling and you don't know what to do. Here's what you do. You go and buy an option to sell at the current strike price or whatever strike price you want to use, it's going to be expensive. Like you can reduce cost, but it has a risk trade-off by reducing the time. And if you're hemorrhaging, like maybe you want to reduce the time to like a couple of weeks or whatever. There's some advantage to removing all extrinsic value from a contract. And so, although it's incredibly high risk, trade-offs everywhere. No free lunch in the markets. Everything is math. Everything has an opposite. Just always about trade-offs. And so puts are, I think, like way more. Oh yeah, I was just saying, like when I first started, I was like, oh yeah, like call options give you more money faster, whatever. But like there's so much that can happen to the price of any security at any time that has nothing to do with truth or fundamental value or even the equity. Like Russia can invade Ukraine, like shit happens. And you have to and you can benefit asymmetrically from those like kind of like relatively known events. Like the stock is going to fall by 20% at some point. That will happen. So what's your plan? And options let you, like I said before, express any market thesis, any number of market sentiments in any direction over any period of time. It's incredible. And so basically with each option, it's a contract that has an expiry time. Basically, you just want to think of like, I'm going to call it by then, or I'm going to put it for this long. Like you stay put until, but like there's different ways you could use them, but that's kind of the easiest way to understand it is like there's the time element is like, how long should it stay put? A day, a week, a month, a year? Well, if you want it to stay put for a year, that's going to be really expensive. But like maybe you're saying anyway, that's the way to think of it is stay put until, and then I'm calling it buy. Like the price is going to be $50 by and then you buy a contract that reflects that idea. And if you're right, you get paid. And if you're wrong, you lose the premium. And so like you also need to know what is the premium for your contract. And that can be kind of tricky to figure out, but the basic rule there is the more extrinsic value a contract has, meaning the longer it is into the future, the more expensive it's going to be. So the further you go out, the more, because you're pricing in everything we don't know about the future into that contract. So like you get to hold that contract at that price and anything could happen. Now it could double or fall in half, but like, a lot could happen over the course of like 2 years. And so you have to pay a premium for that time versus if you were to like hold a similar strike price at a shorter duration, even a couple of weeks, well, not that much is going to happen, even unless it's like an earnings season. And so like there's not that much information to price in. And that's essentially what you're paying for is everything we know to date about this security. And that's why time is such an important part of option contracts. And yeah, that's why. So we got puts, stay put for this long, or calls, I'm going to call it. But then you can sell a call and you can sell a put. And there's different reasons you want to do that. If you want to earn income, you can always sell a call. And that will give you an immediate credit, which you can use to buy more stocks or pay yourself or whatever you want. And you can earn huge credits this way, actually. But you're essentially taking that equity out of the underlying asset. And it just scales exactly with the stock. So if you take that equity out, the equity's missing. And if the stock quintuples, well, hey, all that equity is bound into that inverse contract of that sold call. So like if you're going to sell calls and like you're going to be doing them in the longest of terms, which like I believe that it might be a good idea because maybe there is an opportunity for on some assets, on some securities, on some companies like different companies to do a arbitrage between the extrinsic value into the future and the intrinsic value now, which is basically like if you want to find the cheapest fucking most discounted gobs of fresh equity ever, like that is just the maximum truth and has everything that we know about that company priced into it, and is just like the fairest value for the highest leverage and the least cost, that would be an option that expires in 20 minutes because everything's baked in. And now, like, that's why it's like there's so much that can happen in 1 week. And so the difference in price is actually substantial. Anyway, the point is, like, expiring options do reflect the maximum truth, and you can get gobs of equity down there. I think there's an opportunity. I think there could be, because it's the highest leverage for the least cost, that has the most information put into it. And anyway, I'm still sorting through these ideas. I could look back at this in 5 years and think this is all really dumb and stupid. So I'll just stick to order flow. But that's my thought about options, is like, they're way more interesting. Everything is way more interesting. If you're going to use margin, there's so much to know that you just have to use options. If you're going to use options and margin, then you have to use 100% margin, because otherwise, what's the point? Like, the point would be to amplify your strategy or not to use it at all. If you're going to use leverage, you should be using your maximum leverage, or none. In my thought, you should use your maximum leverage or none. Otherwise, it's not worth the time. And you just buy like an index. But if you want to be able to express a bunch of market ideas at once simultaneously, you can do that through options. So here's the ideas that everyone is basically expressing. They're bearish on ARK, and hey, wouldn't you know? Let's go back like until July 1st or January 1st. Let's see where we were bullish. Okay, so it's bearish the whole time. How is that possible? Search. Anyway, I don't know if this tool is working. But we do have this order flow, and there was something I wanted to show you. Maybe we can run through a couple names. Loading. Let's look at Disney. I know I talked about them, but dude, your website needs help. All right, let's give them free press. What? All right, look away. Nobody look. Are you looking? Don't look. Okay, don't look. Okay, you can open your eyes. So let's do a couple of stocks. So like Tesla, obviously bullish. Look at all these calls, and we're at 66 to 34. I think Coinbase is interesting that it is bullish, and I wonder what people see now. I think what they see is I wonder what people think of Tesla or of Coinbase to begin with. First of all, compared to like what is going to see more growth, I mean, Coinbase is going to trounce Tesla in terms of growth over the next 10 years, or the crypto economy, doesn't matter. either crypto doesn't matter or Coinbase is, they're the leader. And of course, it's theirs to lose, as people say. And maybe something happens where Coinbase has a major failure. I don't know, but they're definitely positioned. And there's two things that make me think Coinbase is on steroids. And it's first, in this better, God, I hope this is true. I'm pretty sure in multiple earnings calls, I've heard them talk about their accumulation program, as part of their building of the crypto economy, they are themselves going to be accumulators of long-term holdings. And, why do people buy MicroStrategy? It's because they know they're going to hoard those Bitcoin forever. And so people want to, hopefully they're hoarding. What was the other? Oh yeah, they are the main nexus of real strength in the burgeoning crypto startup space, which is always being challenged, partially because it is a bunch of dorks swapping tokens back and forth. At the end of the day, it basically is for most of those. I don't know. I'm not very current on the current, so I know that Bitcoin is as real as it gets, and I don't know what the future is, but it exists and it works, and it's got a lot of history. Those transactions, a lot of transactions on that network, so there's a certain value in that. But anyway, so Coinbase, people are bulled up on, which is kind of fucking crazy because that's been my darling forever and people will shit on it. Speaking of which, another darling, well, one-sided anyway, is look at the order flow on Robinhood. It is pretty ridiculously underpriced. So here's the companies that I think are underpriced: Coinbase, Robinhood, ARK. It's not that it's so much underpriced as it's so heavily shorted that it represents maximum truth. Tesla is just you got to own it. You have to own Tesla. You have to own as much Tesla as you can. It's like owning Apple shortly on version 3 of the iPhone or something. It's an important company. Other names I like. Let's see. I had some notes. Oh, I don't know. I was talking about in the beginning about pricing and information to Disney. I think that's valuable. I can't really say what their short-term situation is. If you were to ask me, this looks like a situation where people want to accumulate shares and they short the stock, buy as much that opens up the window, everyone fills up the thing, they unshort it, buy calls, boom, you get the reversal. I don't know how this stuff works. I know that manipulation happens. I have no idea if that's happening to Disney. So I just think it's a valuable brand and they have great content and assets and everything I said before. So kind of a unique one to Utah, which is where I live now, is Zion Bank, which is an incredible institution. It's way older. It's of course, it was the original bank in Utah when the pioneers of Utah settled in the 1800s. They started Zion's Bank. Let's get some facts on this. When did Zion's Bank start? What's the history? Tell us, ChatGPT. 1873. So it's I've been on the market since 57, but 1873. So it's a historic institution and it's not going to fail. No chance. But people have connected it to the regional banking crisis. And so it is at, let's see, 29 bucks almost. Yeah. Which is a little bit elevated from where it's been the last couple trading sessions. And yeah, but you can see here it's trading at 52, and that's down from its highs of like 70s. That's crazy. And even in the depths of the pandemic, it was like at 24. You could have bought it for 24 like a month ago. You could have bought it for like 19 actually, down there somewhere. But yeah, like look at that. Look at all that. This same as Disney. All that's priced in. That whole thing, you got to skip all that shit. You just go right to there. That's a shortcut. That's a shortcut. And you can buy that shortcut on sale today for $28.98. Is how I look at it. Anyway, what else should we ask? Like, what are their primary holdings? What is their core business? Which is, I believe, corporate real estate, actually. Yeah. Oh, they don't have an offer, an answer. No. Anyway, whatever. AI is not perfect. But that's about all I got. I guess I'm running out of steam. Is there anything else to talk about? We can keep talking about options and stuff. I'm going to make these videos. I'm going to put them on the internet. So if you watch it and you get to this point, you got to leave a comment. You have to like and subscribe. That's a gift that you gave me that much time. And I appreciate anyone who's willing to listen, in on my crazy rants. And so let's keep ranting. I'm going to keep doing these videos. Is there anything else I wanted to say? I'll say next time, until the market opens on Monday.